Hello traders, welcome to another amazing video. Now, in this section, we are going to talk about double liquidity sweep, right? We are going to talk about the double liquidity sweep. Now, what is a double liquidity sweep? A double liquidity sweep refers to a price movement where the market clears out liquidity, that is stop loss orders, pending orders, or resting limit orders at two distinct levels or zones before reversing or continuing in a particular direction. Now, I'm just going to quickly illustrate this, what I just said, right? Now, you see something like this. You see price action doing something like this, right? Ranging, consolidating like this. Then all of a sudden, price takes out this liquidity right here. There are a bunch of liquidities right here. It induces sellers also into thinking that the market wants to what? Fall. You will see traders are going to what? They are going to enter this trade, right? They are going to enter this trade, putting their stop loss right here, because they will think that the market wants to what? Sell. But what happened? It went back up, thereby trapping the sellers. Now, it went back up and took out also this buy side liquidity, inducing buyers into thinking that the market wants to go up. What happened? It still comes back in, taking out all the stop loss, because many buyers must have entered this trade thinking that the market wants to go up. You will put your stop loss just here like this, thinking that the market wants to go up. What happened? It comes back in. Now, what just happened? It has successfully trapped both the sellers and the buyers. Now, the next move that the market is going to make, that is what will determine the direction. If price eventually comes back to break this low, right? That means the market wants to what? That is the actual direction the market wants to go. If it goes back up and took out this high here, that means the market wants to what? Go up. That is what a typical illustration of what a double liquidity looks like. Now, let's go straight into the candlestick, into the chart, so I can show you guys this. Here, I took this trade. I gave this trade to my followers on Instagram, and it was a really massive trade. We made a lot of profit with this trade using this strategy. Right now, look at it. This is it here. If you look closely, you see that a similar thing happened here. Take notes. There are what? Bunch of what? Liquidity. There are bunch of what? Liquidity. Right here. What happened? Price trades down, took out all the liquidity resting here. Also, even the pending orders, the limit orders that traders must have set. Traders in anticipation that, okay, when price breaks this zone right here, the market will fall. They are going to put their limit order right here and put their stop loss just here like this, thinking that, okay, when the price breaks this zone, it's going to fall. But what happened? Price didn't fall. Instead, it would induce the traders into thinking that it wants to fall. But what happened? Trades back up, taking out all the stop losses around here, right? Everybody here is cleared. All the sellers here are cleared. Now, went back up to do what? To also clear the buy side liquidity also. The buy side liquidity. The buy side liquidity. Right? Now, what happened? The moment it trades above this zone, it has taken out this buy side liquidity and also pending orders, stop losses of what? Of potential buyers that okay, they think that okay, the market has breaking out this resistance zone, this zone right here. The market wants to what? The market wants to go up. They are going to enter a buy and putting their stop loss just here like this zone here, around here. They're going to put their stop loss, bunch of stop losses around here, pending orders, thinking that okay, the market wants to go up. But what happened? The market went pumped a little bit, comes back down. What happened? The market has successfully trapped both the sellers and what? The buyers. Can you see what is happening right here? The market has successfully trapped both the sellers and the buyers. Nobody knows what to do again. Everybody is confused. The whole stop losses, both on the sell side and on the buy side, are cleared. Now, a typical this is a typical example of what a double liquidity means. Took out the liquidity at the downside, took out also the liquidity at the upside, the double liquidity. Now, for you to now know as a smart money trader where to what, where to go from here, the market has to come, like I said here, if the market trades above this high right here, you know that this market wants to what? That is the actual direction the market wants to what? Go. That means the market wants to go up. Vice versa, if it had broke structure below this low, right here, you know that is after taking out this liquidity at this both side, right? After doing this, after forming this double liquidity sweep, right? If it would break structure above, it means it wants to go up. If it breaks structure below, it means it wants to go down. Now, this is a break of structure, BOS. You can see. Let me clear this. You can see now. The moment price breaks structure to the upside, just like this, then you know that this is a what? This is a buy trade. You know that this is a what? This is a buy trade. All you have to do now is to wait for a little retracement back into this zone, or you can enter at the market price and put your stop loss just below this zone right here. And put your stop loss just below this zone right here. Right? I gave this signal on my Telegram signal group. And we are able to call this move right here. All this move, we are able to catch this. We are able to catch this move, right? Now, this is what a double liquidity looks like, or this is how to trade the double liquidity sweep. Now you can see this retracement. When it was retracing, it formed something that looked like a triangle. It formed something that looked like a triangle. Sometimes it formed something that looked like a wedge, a falling wedge, right? Now sometimes it may not retrace this deep. You get my point. Oftentimes, once it breaks this structure right here, it will just start going up. Sometimes also it may retrace a little bit before what going up, right? Now, this is what a double liquidity sweep looks like, and this is how to trade the double liquidity sweep. Now, if this break of structure that occurred here, if it had occurred below this low right here, then you know that okay, this market wants to what? Sell. That is the actual direction the market wants to go. Let me do it an inverse case so that you can get. Now look at it. You can see what I'm talking about. If it had broken structure to the downside, that means the market wants to go down. That is what I'm trying to say, right? But in this case, let me take it back to the normal. But in this case, it broke structure to the upside. That means the market wants to what? Go up, right? Now, if you find this video interesting, click the like button, subscribe to this channel. I'm going to be posting more educative videos like this. One love, guys. Peace out.